Why silver is suddenly back in the spotlight? You're scrolling through financial news or maybe just browsing investment forums, and you keep seeing the same thing pop up: silver. Not gold, which everyone's always talking about. Not Bitcoin, which dominates every conversation about alternative assets. But silver. People are suddenly very excited about silver, talking about supply deficits and industrial demand and how it's been undervalued for years and is finally about to have its moment. And if you're like most people, your reaction is probably something like, wait, silver? Isn't that just the cheaper version of gold? The thing my grandpa kept in a safe? Why is everyone suddenly acting like it's the most interesting investment opportunity out there? My name is Jack, and I spend way too much time thinking about commodity markets, alternative assets, and specifically the strange psychology of how certain investments go from completely ignored to suddenly being the center of attention, seemingly overnight. And what's fascinating about silver's current moment in the spotlight is that it's not just hype or a random bubble. There are actually some really compelling fundamental reasons why silver is getting attention right now that have nothing to do with speculation or meme stocks or any of that noise. Because here's what's interesting: silver has been this weird forgotten asset for years, trading in gold's shadow, mostly ignored by mainstream investors, sitting at prices that haven't really moved much relative to everything else. But underneath that boring surface, some significant shifts have been happening. Industrial demand is surging because of the energy transition. The supply situation is getting tighter, and the gold to silver ratio, which basically measures how cheap silver is relative to gold, has been at historically extreme levels, suggesting silver might be deeply undervalued. So if you've been curious about why silver keeps coming up in conversations, or if you're wondering whether there's actually something here worth paying attention to, or if it's just another passing fad, this is for you. Because understanding what's driving silver's moment right now isn't just about one commodity. It's about recognizing how fundamental shifts in technology and energy create investment opportunities that most people miss until it's too late. The industrial demand nobody saw coming. Let's start with the thing that's fundamentally different about silver compared to gold. Silver is actually used for stuff, like a lot of stuff. Gold is primarily a monetary metal and jewelry. Most gold just sits in vaults or on people's bodies. But silver? Silver is in your phone, your laptop, your car, solar panels, medical equipment, water purification systems, batteries, mirrors, clothing. It's genuinely useful in ways that gold isn't. And here's where it gets interesting. The world is going through this massive energy transition, right? We're trying to electrify everything, move away from fossil fuels, build out renewable energy infrastructure. And it turns out that a lot of these technologies are absolutely hungry for silver. Solar panels, for instance, use silver paste in their photovoltaic cells to conduct electricity. Each panel doesn't use a ton, maybe 20 grams or so, but when you're talking about deploying hundreds of millions of solar panels globally to meet climate goals, that adds up fast. And solar installation is accelerating dramatically. Countries are setting ambitious renewable energy targets. China is building solar capacity at an insane pace. Europe is doing the same. The US is ramping up. All of this requires silver. Electric vehicles use about twice as much silver as traditional cars because of all the electronics and electrical systems. And EV adoption is growing exponentially. Every major automaker is transitioning their lineup to electric. Governments are setting deadlines for phasing out internal combustion engines. This isn't some distant future thing. This is happening right now, and it all requires more silver. Then there's the electrical grid infrastructure. To handle all these EVs and electrified homes and renewable energy sources, we need massive upgrades to electrical grids. More transmission lines, more substations, more electrical contacts and switches, all of which use silver because it's the best electrical conductor of any metal. I was talking to someone in the solar industry recently, and they mentioned that supply chain people are genuinely worried about silver availability in the coming years. Not because they think we'll run out of silver entirely, but because the rate of demand increase is outpacing the rate at which new mining supply is coming online. And when demand is growing faster than supply, prices tend to go up. Basic economics. This industrial demand story is fundamentally different from what drives gold prices. Gold goes up when people are scared, or when inflation is high, or when currency confidence drops. Silver does some of that too, but it also has this completely separate driver of actual industrial consumption. And that industrial consumption is accelerating in ways it hasn't in previous decades. The supply deficit that's been building. So demand is surging. What about supply? This is where things get even more interesting because silver supply is actually kind of constrained in ways that aren't immediately obvious. First, most silver isn't mined from silver mines. That sounds weird, but it's true. About 70% of silver comes as a byproduct of mining other metals, primarily copper, lead, and zinc, which means that silver supply is largely dependent on the economics of mining those other metals, not on the price of silver itself. If copper prices are low and copper mines shut down, you lose the silver that would have come as a byproduct, even if silver prices are high. This creates this weird supply inelasticity where the market can't just respond to higher silver prices by ramming up silver mining. Because most silver mining is actually copper mining or zinc mining that happens to produce silver on the side. Second, there aren't that many pure silver mining projects in development. Mining is a long cycle industry. It takes years or even decades to discover a deposit, get permits, build the mine, and start producing. And over the last decade, when silver prices were relatively low, there wasn't much incentive to develop new silver mines. So even if prices spike now, new supply can't come online quickly. Third, and this is kind of fascinating, there's this concept in commodity markets of above-ground inventory, basically existing stockpiles of the metal that can be sold into the market. For gold, there's an enormous amount of above-ground inventory. Thousands of years of accumulated gold sitting in vaults. But for silver, because so much of it gets consumed in industrial applications, the above-ground inventory is much smaller relative to annual demand. When silver gets used in a solar panel or in electronics, it's not coming back. It's not like gold jewelry that can be melted down and recycled. A lot of silver is effectively destroyed through industrial use. This means the market is more dependent on new mining supply, which, as we just discussed, isn't growing very fast. Put all this together and you've got a situation where demand is accelerating due to the energy transition. Supply is constrained by the structure of the mining industry, and inventories are relatively low. This is the kind of setup that commodity traders get very excited about because it suggests potential for significant price appreciation. I remember looking at silver supply-demand forecasts from analysts a few years ago, and they were predicting deficits, meaning more silver consumed than produced, starting around 2024 or 2025. And we're basically there now. The market is in or approaching a structural deficit, which historically has led to price increases as buyers compete for limited supply. The gold-to-silver ratio story. Okay, here's where we get into something that silver enthusiasts talk about constantly. The gold-to-silver ratio. And I know that sounds technical, but it's actually pretty simple and genuinely interesting. The gold-to-silver ratio is just the price of gold divided by the price of silver. So if gold is $2,000 per ounce and silver is $25 per ounce, the ratio is 80. That means you need 80 ounces of silver to buy 1 ounce of gold. Historically, this ratio has averaged somewhere around 50 to 60 over the long term. But in recent years, it's been way higher, sometimes reaching 80, 90, even over 100 during market panics. When the ratio is high, it means silver is cheap relative to gold. When it's low, silver is expensive relative to gold. And here's why this matters. When the ratio gets to historical extremes, it tends to revert back toward the average over time. So if silver is trading at a ratio of 85 to gold, and that's well above the historical average, there's an argument that either gold needs to fall significantly or silver needs to rise significantly to bring the ratio back to more normal levels. Now, which one happens depends on the broader market context. If we're in a deflationary environment and commodity prices are falling across the board, maybe gold falls and that brings the ratio down. But if we're in an environment where precious metals are generally rising due to inflation concerns or currency issues, then silver rising faster than gold is what closes the ratio gap. And this is what silver bulls are betting on, that silver will outperform gold on a percentage basis as the ratio reverts to historical norms. If gold stays flat at $2,000 and the ratio moves from 80 to 50, That means silver needs to go from $25 to $40. That's a 60% gain in silver while gold goes nowhere. Or if gold rises to $2,500 and the ratio moves to 50, silver would need to be at $50. That's a doubling from current levels. Now, I'm not saying this is guaranteed to happen or that these specific numbers are predictions, but the point is that there's this mathematical relationship that silver advocates use to argue that silver is undervalued relative to gold, and that when these imbalances correct, silver tends to move more dramatically than gold does. I've watched the gold to silver ratio for years, and it's honestly fascinating how it moves. During the March 2020 panic, it briefly touched 125. Silver was getting absolutely crushed relative to gold. But then over the following year, it compressed back down to the 60s, which meant silver roughly doubled while gold stayed relatively flat. That's the kind of mean reversion silver enthusiasts are betting will happen again. The investment demand wildcard. So we've got industrial demand surging, supply constrained, and a valuation argument based on the gold ratio. But there's one more piece that could really amplify silver's move. Investment demand. For years, investment demand for silver has been relatively muted. People buy gold as an inflation hedge, as a safe haven, as portfolio diversification. But silver? It's been kind of forgotten. It's not quite as prestigious as gold. It's more volatile. It's cheaper per ounce, so it's bulkier to store. A lot of investors just didn't bother, but that's starting to change. Silver ETFs have been seeing inflows. Retail investors are paying attention. And here's the thing, the silver market is actually pretty small in dollar terms compared to gold or really any major financial market. The total value of all the silver mined in a year is maybe $25 to $30 billion. That sounds like a lot, but it's tiny compared to gold, hundreds of billions, or to financial markets, trillions. Which means that relatively small amounts of investment capital flowing into silver can move the price dramatically. If even a fraction of the money that's currently in gold decided to rotate into silver, or if silver became fashionable among retail investors the way certain stocks or crypto have, the price could spike significantly just because the market can't absorb that much buying pressure without prices adjusting sharply upward. This is both the opportunity and the risk with silver. The opportunity is that if investment demand picks up, you could see really dramatic price appreciation. The risk is that silver is volatile and can swing wildly in both directions. And if you're not prepared for that psychologically, you'll probably sell at the wrong time. I know people who bought silver in 2020 when it was rallying, watched it run up to nearly $30, and then watched it fall back to $20 and just gave up on it. They sold at a loss out of frustration, and now it's back above $30 and they're kicking themselves. But that's the nature of silver. It's not a smooth ride. The question for 2026 and beyond is whether we see sustained investment demand driven by the fundamental story we've been talking about, or whether it's just another brief spike of interest that fades away. My sense is that the fundamental drivers are strong enough this time that we might actually see sustained interest, but time will tell. The risks, nobody wants to talk about. Okay, look, I've spent this whole video talking about why silver is getting attention and why there might be legitimate reasons to be interested in it. But let's be honest about the risks because there are several and they're real. First, silver is volatile, like really volatile, way more volatile than gold. It's not unusual for silver to drop 30% or 40% in a matter of months, even when the long-term fundamentals are solid. If you can't handle that kind of price swing without panicking, you probably shouldn't own silver or should only own a very small amount. Second, the industrial demand story depends on continued momentum in the energy transition. If government policies change, if there's a major recession that slows solar and EV adoption, if new technologies emerge that require less silver, the whole demand thesis could weaken significantly. Third, silver has disappointed people before. There have been multiple times over the last decade where it looked like silver was about to break out, where all the fundamentals seemed aligned, and then nothing happened. Or it rallied briefly and then gave it all back. Silver has a history of false starts. Fourth, timing matters. Just because silver might do well over the next 5 or 10 years doesn't mean it won't drop 25% next month. If you buy at the wrong time, you might be underwater for a while, even if the long-term thesis plays out. And fifth, storage and transaction costs for physical silver are real. Silver is bulky and heavy compared to gold, so storage is more expensive. Premiums when you buy from dealers can be high. Spreads when you sell can be wide. These costs eat into your returns in ways that don't apply to financial assets. So silver is not a simple, safe, obvious investment. It's a speculative bet on a commodity with specific supply-demand dynamics that might work out or might not. And anyone telling you otherwise is probably trying to sell you something. That said, I do think the current situation is interesting enough that having some exposure makes sense for people who understand the risks and can tolerate the volatility. What you should actually do. So if you're intrigued by silver's story and thinking about getting some exposure, what's the practical approach? First, decide what role you want silver to play in your portfolio. Is it a small speculative bet? Is it an inflation hedge? Is it portfolio diversification? The answer affects how much you should allocate to it. For most people, silver should be a small portion of an overall portfolio, maybe 2% to 5% of your total investments. Enough that if it does well, you benefit meaningfully, but not so much that if it crashes, you're in trouble. Second, decide whether you want physical silver or paper silver. Physical means actual coins or bars that you own and store. Paper means ETFs or mining stocks. Each has trade-offs. Physical silver gives you the real thing, which some people value psychologically, but it has storage costs and less liquidity. ETFs like SLV are liquid and easy to trade, but you don't own actual silver, just shares representing silver held by the fund. Mining stocks give you leverage to silver prices, but add company-specific risk. For most people, an ETF is probably the easiest approach, unless you specifically want the physical metal for some reason. Third, be prepared for volatility and don't panic sell. If you buy silver, understand that it might drop 20% or 30% at some point. That's normal. If that would make you sell, then either don't buy silver or buy less of it, so the volatility doesn't stress you out. Fourth, don't go all in based on excitement. The story around silver is compelling right now, but compelling stories don't always play out the way you expect. Maintain a diversified portfolio and treat silver as one component, not your entire strategy. And finally, stay informed about the factors driving silver. Watch the energy transition. Monitor supply-demand reports. Pay attention to the gold-to-silver ratio, but don't obsess over daily price movements, or you'll drive yourself crazy. The bigger picture. Look, whether silver ends up being a great investment over the next few years or just another false start, what's interesting about this moment is what it represents. The intersection of technological change, resource scarcity, and investment opportunity. We're living through this massive transition in how we power our civilization, and that transition has material requirements. It requires copper for wiring, lithium for batteries, rare earths for magnets, and, yes, silver for electronics and solar panels. Understanding these material flows and bottlenecks is genuinely important for thinking about where investment opportunities might emerge. Silver's story right now is basically a bet that the energy transition is real and accelerating, that it requires significant amounts of silver, and that the market hasn't fully priced in that demand yet. That might be right, or it might be wrong, but it's based on tangible, observable trends rather than pure speculation. And I think there's value in paying attention to these kinds of fundamental shifts, even if you don't invest in them directly. Because understanding how the world is changing, how we're moving from fossil fuels to renewable energy, from internal combustion to electric vehicles, from analog to digital everything, that understanding helps you make better decisions across all kinds of domains, not just investing. So, whether you end up buying silver or not, the lesson here is bigger. Pay attention to what's actually changing in the physical world, not just what's trending on social media or what talking heads on TV are hyping. Follow the materials, follow the technologies, follow the fundamental shifts in how things are made and powered and consumed. That's where real opportunities emerge. Not from chasing what's already popular, but from identifying what's important before everyone else figures it out. And right now, silver's moment in the spotlight might be signaling something bigger about the resource requirements of the world we're building. Whether that translates into investment returns remains to be seen.